Hey everyone, and thanks for jumping back into the Equityverse. Today, we're going to talk about Apple, and we're going to look at the year-to-date return on investment, or ROI. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. I know we mostly talk about cryptocurrency on this channel because that's, of course, where most of the volatility is, but we actually have built out the website to accommodate a lot more than just cryptocurrencies. And in this video, I want to talk a bit more about Apple. Now, Apple is a stock that has a pretty good track history, generally trending up over time. And I was curious if there's any type of seasonality associated with Apple. Now, this is what the year-to-date ROI looks like for every year going back to 1981. So obviously we want to clean this up a little bit. But first, why don't we take a quick look at what's going on in 2023, which again is a pre-election year. So the election year is next year. Now, oftentimes we will see Apple do somewhat well throughout the pre-election year. Now, of course, if you do run into a recession at some point, that can change seasonality. But if you just look at 2013, 2019, 2015, 2015 is a year where we sort of had a recession scare. We didn't actually get a recession, but we had a scare of one, and you can see that Apple waned as you went into the second half of the year. We can go back and look at 2011 and 2007. And what you'll see as we sort of just click through here is, generally speaking, where we are right now, what do you notice every single year around this time? Apple undergoes some form of a correction historically. Now, some of the time, actually most of the time, the correction is relatively short-lived. It only lasts for like a couple of weeks or so. However, if you do again get a bigger economic scare like a recession or just the sort of the fear of one like 2015, then that could lead to suppressed prices in the second half of the year. But I thought, why not? And we could keep going back even further and looking at pre-election years and just kind of seeing how Apple performs. But I thought, why not average out a lot of these pre-election years just to get a better sense of what ultimate seasonality does Apple experience in the pre-election year. So what we're going to do here is we're just going to average out 2019, 2015, and I mean we can go back as far as we want to. I mean, you can see that it goes all the way back to 1981. Why don't we just go through and get most of them, because I don't really want to leave any of them out. So we have 2019, 2015, 2011, 2007, 2003, 1999, 1995. Let's go ahead and throw in 1991 and 1987, and then one last one, 1983. So this will, of course, accommodate all of the prior pre-election years for Apple. We're going to add that series onto the chart. And this is what you get, right? So you get something that looks like this. And look at 2023, right? I mean, you can see that 2023 has so far followed the average of the last, several, going all the way back to 1983, the average of the pre-election years. Normally, though, it is around this time where Apple gets some form of a correction. So on average, the year-to-date ROI at this point is about 1.39x on day 206, and then by about 217, so 10 days later, it's closer to about 1.33x. Now this year, we've seen Apple outperform the average of the prior pre-election years. It's currently up about 1.49x on day 206. So again, on average, we see Apple find a local bottom on 217, which would be approximately 10 days from now. Now, of course, from there, whether Apple can continue going up into the end of the year would, of course, depend on broader economic things that are occurring, right? Like, does the Fed go too far or do they not, right? Is it a hard landing? Is it a soft landing? Normally, what you see equities do, and I've said this many, many times, is you normally see them climb the wall of worry, okay? Until one of two things, right? Either inflation starts to move up quickly or the labor market softens up. Now, for the last 40 years, inflation hasn't really been as big of a deal. Only in the last couple of years has inflation really resurfaced to cause the Fed to take a much more aggressive stance on monetary policy. But again, The labor market, I suppose, is the larger thing we have to worry about. And up until now, the labor market hasn't really loosened up. So until that time, we know that stocks, in general, equities, love climbing the wall of worry. Remember, it was actually in 2019 when we also had an inverted yield curve. And I mean, you can see back here how Apple climbed the wall of worry for basically until early 2020. And then it saw a sizable correction, right? So you had a low the end of 2018. You actually had a recession come early 2020. And I mean, it ended up being a higher low for Apple. So while the overall index, right, I mean, if you look at the S&P overall, the overall index, sorry for the drawings, the overall index of the S&P put in a lower low. That's not necessarily true for every individual stock, right? It's not necessarily true for every individual stock. Sometimes they don't put in lower lows. Sometimes they put in higher lows. But for the overall index, the recession normally causes a lower low. And again, if you go back and look at 2015, 2016, we kind of had a scare of a recession, but one never actually materialized. And even in that environment where we just sort of had a scare of one, let me reload this so we can clean this up a little bit. When you look at, sorry, this pulled up Bitcoin. When we go back to Apple and you look at say this year compared to say 2015, you know, it also topped out around day 200 or so before then finding some weakness going into the back half of the year. But in 2019, it found a local top around this region, went back down a little bit, but then continued to rally on into the end of the year. So, you know, I do think it's worthwhile to also take a look at what's the most likely outcome next year as well, because again, in pre-election years, we tend to climb the wall of worry. Okay, as long as there's no recession or anything like that, Apple tends to slowly trend higher with some seasonal corrections. But if you take a look at other years like 2020 and 2016 and 2012 and so on and so forth, what you'll broadly notice is that if you average all of them out, it's not as optimistic as pre-election years. And I think one of the reasons for that is because, you know, in election years, there's more uncertainty, right? There's a lot more uncertainty in election years. And so markets don't really like uncertainty, right? They would prefer for things to be a lot more crystal clear. So if you were to just average out all of these, going all the way back to, say, 1984, and we average that, the ROI on average for Apple during election years is a lot lower, right? It's only about 1.2x or so by the end of the year. Whereas in pre-election years, we know that it can go up 1.4, 1.5x, right? So a lot more to be gained in pre-election years than typically election years, assuming you have no recession. So I thought this was worthwhile to look at because again, it is in, you know, around that August-September timeframe where Apple does experience some form of a correction. And if you were to go take a look, you know, at the stock price, right? I mean, it's currently trading at around 194, 195. I do imagine we will get some form of a correction at some point. And whether it's just a sort of a higher low and then trends higher, or whether it's a larger correction down will of course depend on if the Fed accomplishes their goal of reducing wage inflation by softening up the labor market. But up until now, the labor market has proved relatively resilient. If you were to, I mean, for people who haven't watched this channel very much, if you were to go to job openings and look at this is one of the reasons why the unemployment rate has remained relatively low. It's not that the Fed hasn't been making any progress on softening the labor market. It's just that we were coming from such extreme levels that so far, all that's really accomplished is slowly getting us back to the prior trend. And you could argue that we're not even back to the prior trend yet. So whenever we go below the prior trend, that could be where there's more of an issue and where the unemployment rate might actually go back up. But we also know that the labor market takes a long time to move. It doesn't move that quickly. You know, it can take years, months, if not years, to really play out. So that's something that we have to keep an eye on. Hopefully you guys enjoyed this video on Apple year-to-date return on investment. My goal has always been to try to include equities into the analysis on this channel. It's just that I think more people care about the cryptocurrency market because that's what we mostly talk about. But I'll do my best to occasionally talk about equities. My general strategy with equities often is quite boring as compared to crypto, crypto strategy is kind of boring too. But with equities, I usually just stick to low expense ratio index funds. rather than spend too much time, trying to index or trying to just pick out individual fund or individual stocks. But again, I mean, there is some seasonality associated with these equities, and if we do see some form of a correction here by Apple over the next couple of weeks, then perhaps it'll be worthwhile to do a follow-up video on Apple, maybe mid to late August, to see if it's following the general path of prior pre-election years, or if there is some form of economic weakness showing and therefore making it go more like 2015. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and again, check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. See you guys next time. Bye.